So in this video, I'm going to talk to you guys about what cap rates you could assume your mobile home park is going to sell for at any given time if you are looking to potentially put it on market or sell it to a new potential buyer. Now, cap rates of real estate are typically dependent on the interest rate that a buyer can get from a bank. And that cap rate usually is going to be slightly higher than the interest rate the bank is going to be offering them because they need to cover debt service and interest payments at a ratio of 1.25x. AKA, if I'm going to go get debt from a bank to go buy your commercial real estate property, if my debt payment is $10,000, or let's say in a lot smaller one, if my debt payment is $1,000 a month, my net cash flow from that property needs to be $1,250 per month, aka a 1.25x debt service coverage ratio. Now, how does this actually impact the value of your mobile home park and the cap rate you could assume you could sell your park at? The way you could gauge where interest rates and what buyers are going to be buying your park at is usually a proportion based off of the 10-year treasury rate. So banks will usually be anywhere from 250 basis points to 450 basis points above the 10-year treasury rate, depending on how risky either your buyer is or how risky your property is. There's a few different qualities or a few different classes of mobile home parks that yours falls into. You have the highly desirable properties that are optimized for bank debt, aka you have majority lot renters, your occupancy is over 70%, and you're on city utility. That is going to be the least risk, lowest interest rate from the bank, which means highest purchase price for your property. And now let's talk about what the next category is. You have some park-owned homes in the mix, maybe some vacancies, maybe you have some private utilities like a well and septic or well and treatment plant. That's going to be less desirable, but it's still an occupied property. And then the third category is going to be your value add turnaround type properties where low occupancy, a bunch of down homes, like I'd say below 50% occupancy, like those are going to be the ones that are hard to finance. The really easy to finance mobile home parks, if your park falls in that first category, you're likely going to qualify for agency type debt. And agency type debt typically will be 250 basis points over the 10-year treasury. Now, if you look at my screen, as of today, November 14th, 10-year treasury rate closed out at 4.49%, or it's still moving, but around 4.5%. You realistically, a buyer looking at your park, if they can get agency debt on this, CMBS debt, they likely will be around a 7% interest rate, maybe high sixes. Okay, so knowing that, your cap rate needs to be slightly higher than that for like an assumed cap rate you can sell your park at. So if they can get 7% interest rate from the bank, you likely will sell your park around 50 to 100 basis points above that, which means, okay, if you can get 6.5%, 7%, I'm likely going to sell my park at a 7.5 to 8% cap rate. Pretty standard. So when you're looking at what value to assign to your park, interest rate from the bank, give a little bit of spread, that's the cap rate you'll likely sell at. This is just all ballpark rules of thumb. You actually have to properly underwrite the property and look at this at a buyer when you're determining how to start marketing this to potential buyers. So if you guys do want a free evaluation, mhpvalley.com, I will give you a full 6+ page PDF evaluation for completely free. I will dissect your financials, back out unnecessary expenses, because I know a lot of you guys probably underwrite a lot of unknown expenses through it, and I'll do it for free. But anyways, desirable properties, 250 to 250 basis points above 10-year treasury. Now, typical bank mortgages are going to be around 300 to 350 basis points above that rate. So 300 basis points above 4.5 is 7.5% to 8% interest rate, which means your park's likely going to trade at an 8.5 to 9% cap rate because you need a little bit of spread on top. That's for your typical deal. You have some park on homes, maybe you're on well and septic, maybe you have like some type of private utilities, park on home component, you don't have your lot rent income separated out from park on homes. It's a little higher risk for the bank, so they're going to be a little higher on their interest rate to account for that risk. Then the third quality is usually going to be like your hard to finance deals. The only way that a buyer is going to get that finance is they're going to go to a local bank, and the local bank really is looking at the quality of buyer. Now, can a really strong buyer who owns 5 mobile home parks surrounding the deal that you're looking to sell get this finance at a reasonable interest rate? Yes. If you're not selling to a extremely established buyer with lending relationships already, now you're looking at 350, 400 basis points. And honestly, it could be anywhere all over the place. I hear local banks doing interest rates well above 10%, which means you are going to trade your mobile home park well above 10% unless you're going to sell or finance the deal, which is what a lot of sellers are going to now because they can't get a fair enough price for their property just because debt is too expensive. Do you want to take the risk of seller financing? That's another story. You have to know how to vet buyers. There's a lot behind that. If you want to work with me, I do vet that for you. But the interest rates for low desirable parks, if someone's getting private debt, that's going to be a ridiculous interest rate. But like I mentioned, if you want to assume what cap rate you should price your park at, it's going to be a slight spread above what bank interest rates are. And the way you calculate bank interest rates as a general rule of thumb is anywhere from 250 basis points to 350 basis points above the 10-year treasury rate, and then a little bit of juice on top. So keep that in mind. Right now, parks, as of November 14th, if it's desirable, trading around 7.5%, 8% cap rates. I know this because I personally have 5 deals under contract right now, all in that ballpark range. If you're someone that can't pay better than that, like let's say you're a buyer or investor watching this and you're like, this is ridiculous, I can't pay an 8 cap for a property. Listen, I understand not everyone wants to buy a deal at razor thin margins, but if you're watching this, you're probably thinking about selling, and my job is to get you the absolute maximum highest price possible, and I have a proven track record doing that. And the way you do that is understanding the marketplace from the point of view as a buyer, and then now I could try and adjust and overcome the objections because I understand how the game works and how financials and returns on properties work for a lot of the largest investment groups out there. So if you want to work with me, or if you're interested in that 100% free evaluation, all you have to do is click the links in my bio or description, or go to mhpvalue.com, sign up for your free evaluation on there, and I will personally give you a call, shoot you a text, and send you we'll run through financials. I just got to see your rent roll, profit loss statements, or run through a list of questions, and then I could talk specifically about what you need to do in order to maximize your value, and you'll know if it's even worth selling your property now or holding on to it, or potential creative financing options you could offer that are both beneficial to you and will allow you to sell your property for a really good price.